Hello there, welcome to David's Investment Analysis channel. Today I'll be talking about a company where the stock price went up over 472% the past 3 months, 218% this past month, and 91% this past 5 trading days. And on June 8th, it went up over 103%. The stock I'll be talking about today is Nikola Corporation, traded on the NASDAQ under the ticker symbol NKLA. I'll first talk about the company, what they do, how they earn income. Then I'll follow up with a qualitative analysis looking at why they went up so much in such a short time. And then I'll follow up with a quantitative analysis looking at the financials and valuations. I'll then conclude on whether I think the stock is a buy at its current price and whether I own any shares of this business myself. If you would like to skip out on the introduction and analysis and go straight to the conclusion, I've left the timestamps below. If you haven't yet, please like, share, and subscribe, and let me know in the comments below whether there's any company you would like me to cover in the future. Now let's get to it. Nikola Corporation is a global leader in zero-emissions heavy-duty trucks and hydrogen infrastructure. They plan to supply both electric and hydrogen fuel cell trucks and create a worldwide hydrogen fueling network. The company is only at its very early stages of building out their business. They have a vision of being a global leader in zero-emissions heavy-duty trucks and hydrogen infrastructure. Now let's look at some of Nikola's products. So within the motors section, they have Nikola 1, 2, and 3, and Nikola Badger, which looks pretty cool. We'll talk about this one a little bit later. Now let's look at their power sports products, which include Nikola NZT, Reckless, and Nikola Wave. Unfortunately, there are currently limited number of hydrogen stations across the US, with the majority of them in California. It is why there aren't too many hydrogen vehicles on the road. So in order to support Nikola's trucks, Nikola plans to install hydrogen stations across the US and parts of Canada. Now let's look at some of the qualitative factors and discuss why the stock price increased significantly in such a short time. It all started on March 3rd, 2020, when Nikola announced that it would merge with Vector IQ, a publicly traded special purpose acquisition company. This would allow Nikola to be publicly traded. After the closing of the transaction, the combined company will be named Nikola Corporation and will use the ticker symbol NKLA. Now let's look at some of the highlights in the news press. Nikola to use proceeds to accelerate its portfolio of battery electric vehicle and hydrogen fuel cell electric vehicles to targeting zero emissions globally. This sounds very positive. We can see that the auto and trucking business has been trending towards zero emissions, and this would be a very good opportunity for Nikola if they can execute. Nikola will build out hydrogen station infrastructure to support its fuel cell electric vehicles. This is important as there is limited hydrogen stations currently. Nikola has more than 14,000 pre-orders, representing more than 10 billion in potential revenue and 2.5 years of production. Pro forma enterprise value of the merger is approximately 3.3 billion. This is the expected value from the merger. Let's remember this 3.3 billion, which we will use later. Transaction includes a 525 million fully committed common share PIPE at $10 per share, supported by institutional investors. And these are very respectable investors in Nikola Corporation. The company will add Stephen Gursky, current CEO of Vector IQ and former vice chair of General Motors Corporation, to its board of directors. After this merger, Nikola would be publicly traded, and I believe many investors didn't want to miss out on this opportunity, just like Tesla. Tesla stock has gone up over 4,800% since its IPO in 2010. A follow-up presentation was prepared to provide more information on April 6th. I've highlighted some areas where I thought would be interesting to discuss about. Management team. Prior to the merger, the CEO was Trevor Milton, the one who founded the company and is the visionary of the company and led the company to where it's today. He was the face of the company. What surprised me was that he stepped down as CEO and appointed Mark Russell as CEO when the merger took place. They have several key management that appears to have experience within the industry. Trevor Milton only completed about a semester of college before he founded D Hybrid Systems, which later was sold to Worthington's Industries, which in turn provided the seed capital for the start of Nikola. However, when you compare Trevor Milton to Elon Musk had a lot more experience prior to being the CEO of Tesla. Musk holds a bachelor's degree in economics and a bachelor's degree in physics. He built a web software Zip2 with his brother that was sold for $340 million in 1999. He also co-founded a company that was later merged with Confinity, which had PayPal, and it was later sold for $1.5 billion to eBay. Next is the timeline of the business. It was founded by Milton in 2015, and by 2016 it had a prototype Nikola 1. In 2018, it had signed an agreement to provide up to 800 trucks to Anheuser-Busch, an agreement with Nel for the development of hydrogen stations. In 2019, the company unveiled a fully operational truck named Nikola 2. This speaks to how new the business is. They have a manufacturing plant and a few prototypes right now, and they still need to start production, test vehicles, and begin rolling out hydrogen stations. The company expects to generate revenue by 2021 with the rollout of its battery electric vehicle truck, followed by their fuel cell electric vehicle truck sales starting in 2023. And comparing it to Tesla, Tesla is planning to start production earlier than previously announced, and will start production of the Tesla semi-truck in 2020. And they already have service centers including charging stations across the US and globally. Next, what we have here is comparison between hydrogen electric, battery electric, and diesel vehicles. Hydrogen is powered by hydrogen fuel cell. And for those that do not know what hydrogen fuel cell vehicles are, they're essentially electric vehicles powered by hydrogen and oxygen. The combined gas creates water and electricity and is used to power the vehicle. The battery electric vehicle is powered by a battery just like Tesla, and diesel vehicle is powered by diesel engine. Looking at the refueling and recharging time, the refueling of hydrogen vehicle takes approximately the same amount of time as refueling a diesel truck, and a lot faster than to fully recharge an electric vehicle. Looking at the range, battery-run vehicles generally have a shorter range. But per Tesla's website, the range for Tesla Semi is between 300 and 500 miles. The hydrogen electric vehicles tend to be lighter because of the use of oxygen as opposed to needing a larger battery. So the truck is generally lighter and can carry more. Overall, hydrogen electric vehicles sound very promising based on these metrics, especially with the trend towards zero-emissions vehicles. So it appears that most of the 14,600 vehicles have been sold to large corporate customers, but there is also still 36% that are based on reservations. These reservations don't include any deposits. It's as easy as signing up for a newsletter, so I wonder how much of this would actually be converted to sales. Since I wasn't able to reserve the trucks, but I did try out registering for one of their power sports vehicles. All you need to do is click reserve yours now, and below here it says $0 to reserve. I'm going to choose a quantity of 5 for the fun, and then click reserve now. And then all you need to do is fill out some personal information, and that's it to order Nikola's products, without any commitment or deposit. Now let's look at some of the numbers. This is a summary of the merger transaction, and I'll be using some of the numbers here later. Transaction implies a fully diluted pro forma enterprise value of $3.3 billion, and this was the number we saw earlier, and is based on 1 times 2024 expected revenue of $3.2 billion. The transaction will result in $709 million cash on the balance sheet to fund the growth. If we sum up the $3.3 billion enterprise value plus the $700 million in cash, we have an implied valuation of the company for $4 billion. We'll use this number later for a calculation as well. This is the projection for Nikola's in the next few years. The valuation of $3.3 billion is based on the revenue in 2024 of $3.2 billion. Now let's look at the valuation. The current market cap of Nikola is $23 billion versus Tesla's valuation at $190 billion. For comparison reason, let's look at where Tesla was when they were at $23 billion valuation. Currently, Nikola is 12.28% of Tesla's market cap. To see what price Tesla trades at when they are at $23 billion market cap, we multiply the percentage by Tesla's share price. We get $126, and the first time they hit this price was July 2013. So let's take a look at their June 2013 Q2 results. For their Q2 2013 results, they already have net income of $26 million, sales of 5,150 Model S vehicles, and 47 service centers globally. For Tesla to trade at $23 billion, they needed all this. And right now, Nikola trades at the same valuation, but they haven't even started production or rolling out hydrogen stations. Looking at both price to 2024 sales and price to book, Tesla trades at a more favorable valuation. For Tesla's estimates 2024 sales, I used a very conservative growth rate of 15%. Nikola trades at 1.9 times more expensive than Tesla. For it to be traded reasonably, Nikola would have to grow a lot faster than Tesla. Although Nikola's balance sheet perhaps is currently stronger than Tesla's because they have a net cash of approximately $700 million, Nikola will need to spend this money towards production, distribution, storage, marketing, and others, and rolling out their hydrogen stations. Nikola will likely need additional capital in the future to fund its growth. As discussed earlier, the valuation of the merger was at $4 billion, and the price of the stock for $4 billion is $11.14. With the current valuation, it's 5.8 times more than what it was just a few months ago. Now let's look at the stock chart. Nikola is up 472% in 3 months, 218% in 1 month, and 91% in 5 trading days, compared to Tesla up 68% in 3 months, 25% in 1 month, and 16% in 5 trading days. So what happened within the last 5 days of trading that made Nikola's stock jump so much? On June 8th, Trevor Milton tweeted that Nikola would start accepting reservations for its Badger pickup truck on June 29th, saying, "You'll get to see a real operating truck, not a fake show. This may be a jab at Tesla's Cybertruck." I believe this was the main news that drove the price of Nikola up over 103% in a day on June 8th. Conclusion. At its current price of $65, a valuation of $23 billion, in my opinion, I do not believe the stock is a buy at this price. While Nikola has many things to be excited about, like the production of both electric and hydrogen fuel cell zero-emission trucks, hydrogen fuel cell vehicles have a shorter refuel time, longer range, and a lighter body compared to battery electric vehicles. As people move away from diesel vehicles, the alternatives would be electric and hydrogen fuel cell vehicles. There is currently no big manufacturers of hydrogen vehicles, so the potential is huge for Nikola. Their trucks look very nice, and they have a solid amount of pre-orders for their trucks and will provide $10 billion in revenues. They have a very solid and very experienced management team. So some of my concerns are the execution risk. Nikola is a very new company and has a lot of amazing plans, and there can be risk in carrying out those plans. I believe Nikola needs to prove themselves by showing results such as mass production, delivery of trucks, and rolling out hydrogen stations. And if Nikola can execute what they are planning to do, this company will definitely be over $100 billion someday. My biggest concern is valuation. On a price to 2024 sales ratio and a price to book ratio, Tesla is cheaper than Nikola. There's perhaps more growth in Nikola, but it's difficult to justify a $23 billion valuation. And when Tesla was at a $23 billion valuation, they were already delivering vehicles and have over 40 servicing stations globally. A potential opportunity on Nikola is the divergence of price between Nikola's stock price and its warrant price. So each warrant allows the holder the right to exercise and buy one Nikola stock at $11.50. However, the holder of the warrant cannot exercise until after 30 days after the merger close, which is approximately July 3rd. The current stock price of Nikola is $65, while the warrant price of Nikola is $28. A person can buy one warrant at $28 and then exercise the warrant after July 3rd and buy one share of Nikola at $11.50. So the total cost of each share would be $39.50. So it is cheaper to buy the warrant now versus buying the stock, but please note it does come with increased risk. The stock price and the warrant price should generally trade in tandem, but there appears to be a divergence because of the recent increase in the stock price, while the warrant price didn't go up as much. The divergence of $37 should trend towards $11.50 as we get closer to the date when warrants can be exercised. Disclosure: I do not own any shares or warrants of Nikola Corporation, and I do not intend to buy any at its current valuation and price. But I do think that Nikola is a great company and have a lot of potential if they could carry out their plans. I would be very interested in buying some shares later when they share some results, or when the stock price drops to a reasonable valuation. So I'll definitely be paying attention to this company going forward. That's it for now. And if you haven't yet, please like, share, and subscribe, and click the bell notification. Thank you for watching. Until then, see you next time.